When it comes to high growth stocks, valuation is of the utmost importance due to the added volatility that comes with growth stocks. And in today's video, I'm going to discuss a popular fintech stock that has fallen off 30% from its recent 52-week highs. Is this fintech stock a buy now, or is there more pain ahead? In today's video, we are going to be looking at valuation, current and most recent quarterly results, future growth potential, and my plans with this stock ahead. Let's jump in. Hello everyone, Mark Rusin here, back for another video. If you're new to the channel, please hit that subscribe button down below so you'll be notified anytime we drop new content. Here on this channel, it is my goal to talk about everything that has to do with investing. We'll be discussing stocks, ETFs, REITs, index funds, and we'll also be touching on personal finance topics as well. As always though, everything discussed in this video is for educational and informational purposes only, as I am not a financial advisor, so please do your due diligence before investing in any stock mentioned today. Okay, let's get started. And that fintech stock that I mentioned has fallen 30%, over 30% from its recent 52-week highs, and that stock is PayPal, stock ticker PYPL. Before we get too far into it, let's take a look at what PayPal is and what they do so you have a brief understanding before we dive too deep. PayPal is an online payment system that makes paying for things online or sending and receiving money safe and secure. When you link your bank account, credit card, or debit card to your PayPal account, you can easily access this to make purchases online with participating stores. The company was founded in 1998 and was actually acquired by eBay, but eventually spun off into their own two separate companies, and in fact they are slowly coming off the eBay platform as well, which has been one of the contributing factors to the drag on shares of PayPal more recently. The PayPal platform is beneficial to both small, medium, and large-sized companies due to the fact with the growth in e-commerce, folks can easily just access and sign into their PayPal account to quickly make a purchase online with participants that also join the PayPal community. The company also owns the popular money transfer app Venmo, which has been very popular amongst the millennial and Gen X generations and growing every single quarter that we see the results. One can easily transfer money from one Venmo account to a friend's Venmo account. Say you go out to eat and you don't want to just split the bill up 6 ways. Have one person pay for it and you can Venmo your portion to that person. Just this past week, PayPal released their third quarter results, and in their management announced a partnership with Amazon in which Venmo will be an option for folks to check out on any purchases they make on the Amazon platform starting in 2022. Based on that, you can get a better idea on what PayPal or Venmo does with their company. They partner with these e-commerce companies that have online presence, and it's just an easy way for folks to not have to scrum around and look for their credit card. They can easily click on the PayPal option, sign in, and boom, you're done. You're checked out. It already has your mailing address on there, and it's just an easy way for folks to make online purchases or even buy online and pick up in store, which makes another growth category for PayPal. It's not just online purchases, it's also online and pick up in store purchases that benefit PayPal. Now that you have a better idea on what PayPal does, let's dive into their most recent quarterly results. The company reported Q3 revenues of $6.18 billion, which was a 13% increase year over year. Total payment volume, which is the number of dollars transacted on the PayPal platform, totaled $310 billion during the quarter, which was a 26% jump from prior year. In terms of total transactions, the company saw 4.9 billion transactions come through the PayPal platform in Q3, a 22% increase year over year. In terms of net new accounts opened during the quarter, the company saw 13.3 million net new accounts, which was actually a decrease of 12% from prior year. Free cash flow came in at $1.29 billion, which was an increase of 20%. So as you can see there was a lot of positive that came out of the most recent quarterly reports. We had already touched on Amazon partnering with Venmo, making Venmo an option for folks to check out when they want to purchase something on the Amazon platform. They can easily, instead of paying with a credit card or anything else, they can click on the Venmo option and just easily transfer money and pay for their online purchase. Quarterly results showed that the revenues continue to grow. Net new accounts were slowing, and that has been a major focus for analysts and for investors. Part of the sell-off that we recently saw was the worry about the slowing trend of growth around accounts for new. So overall, it was a very solid quarter for PayPal. We already heard about the announcement with Venmo being an option for consumers looking to buy on Amazon. They can just simply check out using their Venmo account. And we saw revenue growth. We saw free cash flow growth. We saw the transactions were up. The slowing trend of net new accounts was a major focus for analysts and investors, which contributed to the sell-off that we saw after the results were announced. So as we mentioned, revenues for the quarter were $6.18 billion. But in terms of analyst expectations, analysts during the quarter were looking for $6.23 billion, so we saw a miss in terms of revenues. If you combine the top line miss with slowing growth in the net new accounts, you can get an idea on why shares sold off in the days after the quarterly results were released. Next, let's take a look at where the company is headed and the future growth of PayPal moving forward. So as we already mentioned, Venmo is a very popular app amongst the millennial or the Gen X generations, which the company is looking for ways to monetize this Venmo app and the popularity, because right now you can send back and forth small dollars from one friend to another or pay someone for a small task or service, but the company, it is free to use. Once you use or transfer a certain amount of dollars, that's when you start having to pay a fee. So the company is looking for other ways to monetize Venmo moving forward. One way is going to be doing and partnering with Amazon starting in 2022. Overall, part of the concern around analyst expectations is the slowing growth in not only e-commerce buying and the lack of stimulus money that was there in 2020. No longer are we seeing the Fed printing money like they were in an insane fashion. And also we are seeing more folks head back to work, where a lot of folks were just at home in front of their computers, and it was just easily accessible to get online and make a quick purchase. So those are some of the fears moving forward in terms of guidance. But when the company released guidance, not only were expectations already tampered down by analysts, the company actually released guidance that was below analyst expectations, which was another blow to the shares in the days after the earnings report. In terms of that guidance, analysts were looking for Q4 sales, which Q4 is a major quarter for PayPal, considering we will have the holiday sales and a lot of, Cyber Monday, and a lot of online sales are continuing to creep back up in this quarter. But in terms of what analysts are looking for just in this quarter, they were looking for revenue to be $7.24 billion in the 3 months ahead, but PayPal guided to 6.85 to 6.95, well below analyst expectations. Moving to the full year 2022, analysts were expecting total revenues to be $31.6 billion, but management actually guided $30 billion. Again, a pretty sizable miss in terms of guidance moving forward, which was another key on why the shares sold off after the earnings results. However, management does have high expectations, and by the year 2025, management fully expects to hit their goal of $50 billion in revenues moving forward. The fourth and final reason on why I believe shares fell in the days after the earnings result is due to the pullback from eBay. Again, PayPal used to be owned by eBay. PayPal was an option when folks bought things on eBay, but eBay has now created, and since the companies have spun off, eBay has created their own payment platform and is moving away from the PayPal platform, which was a big hit initially, but a lot of analysts and investors understand that hit. But now PayPal saw eBay revenues decrease 45% in the quarter, but they now only account for 4% of the total revenues that PayPal saw this third quarter. Next, let's move to valuation. And this was the first thing that I mention on this video is the importance of valuation when it comes to growth stocks. There's just not much room for error when a stock is paying and shareholders are paying such high premiums for the growth in these companies. If the growth isn't there, which we saw slowing net new accounts, and the guidance is soft and there's eBay issues, but we did see, some Venmo positive news partnering with Amazon, but these things add up and you're going to see shares fall a sizable amount when there's hiccups like this. Now again, I'm a long-term investor, so I'm going to look for opportunities like this. If I still believe in the long-term vision of management and I still believe in the long-term aspects and prospects of this company moving forward, then I'm not worried about the fourth quarter or even just 2022. I'm looking at 2023, 2024 and beyond. What is this company going to do moving forward? And management still stands behind their $50 billion revenue goal by 2025. So in terms of valuation, when it comes to growth stocks, I'm not a big proponent of looking at the price to earnings ratio, which is one of the most popular earnings metrics or valuation metrics to look at out there, just due to the fact that this is a high growth stock. They are turning a profit right now, so I will briefly discuss what the price to earnings ratio is for the company right now, which is 39.9 times, which when you compare that to their 5-year average, it's actually slightly above that of 37 times. So over the past 5 years, on a price to earnings ratio, the company has traded around 37 times, whereas right now it's at 39.5, even after the sell-off we've seen in shares. However, two of the metrics I do like to look at, amongst many others, is the price to sales metric as well as the enterprise value to sales metric, which takes into account some of those balance sheet aspects, cash and debt, as well as revenue. And I like to look at both of these on a forward-looking basis. In terms of price to sales, the company currently trades at a forward price to sales of 8.4 times, and looking at enterprise value to sales on a forward-looking basis, they trade at 7.5 times. And when you look at this chart, you can see that valuation is slowly moving south, making shares of PayPal look even more intriguing based on expected 2022 growth rates, revenue growth rates of 25% roughly. So what do we do from here, you might ask? And I'm so glad you asked that question. Thank you for asking it. As I had mentioned, I am a long-term investor, so I'm not looking at Q4 2021 or, super focused on 2022. I'm looking at what is the company going to continue to do? Are they going to continue to evolve? Are they going to continue to hit their goals moving forward? And the company has that $50 billion revenue goal that they're still standing behind. And, the short-term blips in the radar that they're seeing right now with a slowing growth in net new accounts or eBay troubles or soft guidance in the short term. Those are all things that are short-term issues, but the company isn't broken. The company is continuing to evolve, and you could see that with the partnership we're seeing in Amazon. So for me, I'm still excited about the prospects, the long-term prospects of PayPal moving forward, which is why I like to take advantage of these pullbacks in high-quality companies. Now, there's no denying that there are these short-term bumps in the road for the company. Consumer confidence is lower. We're also seeing less stimulus money. More folks are getting out with the pandemic slowly getting behind us. That doesn't help PayPal in much. But at the same time, e-commerce sales are going to continue to climb. And we are moving into the holiday sales again, the holiday period, which should be another boost for e-commerce as it continues to climb higher, even though it's still such a small piece of total retail sales. Cash is going to continue to be used less and less, especially with this pandemic now. More folks want to see electronic payments, and these things directly benefit a company like PayPal. Another growth analyst for the company that I believe is that they just recently entered the crypto market, the on fire crypto market, and they just started allowing consumers to buy and sell digital currencies on their Venmo platform. This is a direct competition with companies like Coinbase or even Square's Cash App. And again, I will touch on it one last time that I believe this Amazon partnership, anytime you're able to partner with a company like Amazon, it is going to be able to get more eyes on your Venmo app or on PayPal, but it's going to be Venmo on there, which is just a huge opportunity if the company can execute in 2022 and beyond. So for me, let me tell you what I did with PayPal here with the sell-off that we saw. I added some shares. I added some shares here. I also bought long-term call options. I bought long-term call options, and I also, to show how bullish I am on PayPal moving forward, and I'm not worried about the short-term blips, but I sold cash secured puts with a $190 strike price. And what this means that is if the company's stock price, which is over 200 right now, if it falls even further than it already has before the expiration date of my options, which are expiring here in the next couple weeks, if it falls below, then I need to buy at least 100 shares per option contract at the 190 strike. And I'm happy to do that because I just bought shares at near 200, but if they fall another 10 bucks, I'm happy to buy these because I'm a long-term investor. But at the same time, if they don't fall that far, I'm going to collect the premium, and I'm going to continue to do this in stocks I like. I especially like this strategy when I see big pullbacks in high quality companies, because not only did we get shares that bump down to a even cheaper valuation, I can essentially create my own buy the dip by utilizing cash secured puts. And I will do another video on introduction to options and how I utilize option selling of puts and buying calls in another video. So there you have it. Popular fintech company PayPal. The company's been around for a while, but I just believe they are starting to hit the ground. They're starting to innovate in different ways. And one thing I didn't mention in this video that I want to mention real quick is the speculation around Pintrest. Now for me, I'm glad they didn't buy Pintrest. I don't think a stock or a company like PayPal needs to be messing around with a social media company. They need to focus on their electronic payments and how they'll evolve and get more partnerships like they did with their Venmo app into Amazon. And I understand they want to get closer to the consumer with Pintrest, but let's not pay a premium for something like Pintrest, which is slowing growth. We're already having the slowing growth here at PayPal. Let's focus on our own platform. So that was just another reason that shares fell. And then you add on the soft guidance and the not stellar quarterly results and the slowing ads. It put a lot of pressure on short-term investors to make a decision, either get in and get out. But for me, being a long-term investor, as I mentioned in here, I see this as an opportunity, a long-term opportunity to buy a high-quality company, and that's exactly what I did. I hope you enjoyed the video and got some value from it, and if you did, please hit that thumbs up button as it strongly helps grow this channel moving forward. With that being said, we will see you in the next video. Take care.